What's going on, everyone? So, let's get into this video today talking about, hey, what stock am I going to buy or am not going to buy is going to be IBM or International Business Machine Corporation. So, I'm trying to look for companies to add to my portfolio so I can use the passive income from dividend paying stocks. Now, my requirements for this stock to be added to my portfolio is one, is does it have a dividend paying stock? Number two, does it have a good financial standing? And three, do I have a good growth opportunity? And those are my three requirements before I add to my portfolio. Now, I just look at the data and based off my opinion, if I think it will keep growing or not. So let's get into this stock. So the stock I'm looking at is IBM. If you don't know what IBM, they're AI insight company and they also make computers for technology. So they're a technology company mainly built in the heyday of, guess what, building computers. So they do get a basic, they are a basic company and a good blue chip company. Now, should you invest in them or should you not? It's based off your opinion, but they are a good company. They do have a good repertoire with a bunch of companies and good partnership. So they are a good solid base company to have. Now, let's look at the data to see if it's worth having. So year to date they grew about 16% and 1 year they grew about 36.81%. That is a good growth. Now, let's look at the 3 year. They grew about 86.44, and the 7 or 5 year they grew about 77.9%. So they have a really good growth based off the 1 year, and then the 3 year is 86%, and that's not bad. Now, their dividend percent is 2.61%, and that's a pretty good dividend. And let's look at the finance. So the finance on this is they used to be a $79 billion company in revenue, and it looks like they tanked for a little bit, and they're building up their sale revenue. Now, they have a gross profit margin of 56.65% and a net profit of 10.31%. Man, that I'm not so sure if that's a very good net profit for a technology company. Because if you do compare this to Meta and Nvidia, they have a 30% in the net profit, and this is only has 10%, which they this is a really established company, and 10% is pretty much average, in my opinion, on the earnings for this type of company. So let's look at what AI is saying. The valuation is 3 out of 6. The earning is 4 out of 6. The growth is 0. Performance is 0. And health is 1 out of 6. So I agree with the growth. It doesn't match my portfolio for growth opportunity just because it says it grew a lot in the 3 year mark or the 1 year mark. Doesn't mean it's going to continue with that. Now, the reason why I don't think it's going to continue growth at the rate they're going is just because I don't see them innovating new chips or anything like that at this point. And that's what really helped push AI is to have better gear. Now, let's see what's going on with the company and if anyone's really selling or buying. So Zoller Alfred, he just bought some stocks. I don't see him on here. So, and then this lady or yeah, this lady bought some or sold some, and I don't. Lamar Nichols, Chief of Human Resource VP, sold about $1 million worth. And let's see what's. So it looks like most of them hold on to their stock, so it's not a big deal on that part. But they will have a pretty good earning. Let's see what the analyst says to do. So they say a hold on this one. And I kind of agree. If you already have this stock, it's no point of selling it. It's still a good stock to have in your portfolio. And I think it will continue to grow at a 12 or 14% a year, at least for the next 10 years. I think last year was just a peak in the last few days. And it was the end of the year. They just had a big spike. So I think they just had a big spike at the end of the year. And that just because of the earning reports. Now, I will not be adding this to my portfolio because it doesn't look promising to add this to my portfolio. They are a good blue chip company. If you are close to retirement, this is a good stock to add to your portfolio. It's less risky, less volatile, and it's a good one. It's just for my portfolio where I'm looking for a more risk reward situation. This is not as rewarding as something like Nvidia and Meta, where they stay more of a cutting edge, where they could lose valuation income real quick if a project goes bad. Where this one's a steady, true blue chip company. So, if you are closer to retirement, you should add this to your portfolio. It makes sense because they're a pretty stable company. Now, they don't really have any bad news about them, and they don't really have a lot of good news go out about them. So guess what? They're gonna get moderate return. They're gonna get moderate returns, and to be honest, IBM it's going to keep growing. They're a stable company, and they do make a profit. I just don't think IBM is going to beat Microsoft earnings and beat all the other companies' earnings like Nvidia in the AI market. I think they're behind the power curve. So, with all that said, I don't recommend buying IBM if you're looking for a good growth for the next 5 or 10 years. I think in 1 to 5 years, they're going to have a nice steady growth of about, 14, 15, maybe even 20%. But then after that, they might just steady out because they lost market share and they're trying to get some of the market share back right now. So it is a good growth opportunity if you are looking for a nice slow growth. But I'm trying to look for something in the AI industry that'll grow like 30, 40% because it is in the AI market. So I expect if I'm going to be in AI market to have a bigger growth return because it makes more sense that way. Because think about it like this. You're not going to invest in a Coca-Cola company and expect a 50, 60% return. You expect a nice steady return. But with AI, I expect due to being technology is to have a big boom. If they have a big boom in AI, guess what that means? They should have more growth in the they should have more growth so there'll be more profit and more earnings. So AI next few years should blow up. And if it's only getting a 20, 30% return, where all the others getting 60, 70% return, it makes more sense to go with a 67% return. Since I'm longer or farther away from retirement, I can recover from it and hold the stock for longer. So personally, I already have Nvidia and Meta. There's no point to also add IBM. I also have Broadcom. So I have three AI companies already in my portfolio, and it doesn't make sense to add a fourth right now because I'm not trying to buy 500 stocks. I'm only trying to buy uh, about 30 or 40 stocks and hold them out to get a good growth. So the whole point of me is trying to find the 40 stocks I want to add to my portfolio or even 50 stocks. But it's not to have a whole bunch of stocks like 2 or 300. It's just to have stocks in each field to diversify. So this doesn't meet my cut for diversification for compared to my other three AI stock. So this is why I'm not adding them. But it is a good stock to add. You should add them if you don't have one of the other stocks. But Meta, Nvidia, and Broadcom are really risky. So, but the risk is worth the reward for me. So, like, subscribe to my video. That's all I got for you.